Hi everyone, I want to thank you for viewing our Submitting a Successful Development Budget webinar. This webinar will provide guidance if you're submitting a budget for the first time or if you just need a refresher. We will cover what you should be submitting with your budget and some common errors. All developments with a Minnesota Housing first mortgage and even some developments with deferred financing may be required to submit annual budgets and monthly operating reports to Minnesota Housing. You can check your regulatory agreement to see if this applies to your development. Annual budgets are generally due October 31st. However, if your property was approved to have a non-calendar accounting period, the due date would be 60 days prior to the end of your fiscal year. All budgets need to be sent directly to the appointed housing management officer here at Minnesota Housing. To locate the budget information on the Minnesota Housing website, go to www.mnhousing.gov. On the right-hand side of the Minnesota Housing main page under Multifamily Rental Partners, select Management, Compliance, and Servicing link. This link will bring you to the Asset Management page. Under the Budgets and Operating Reports orange heading, you can access the Excel budget reporting tool, also known as the BudRep version 8. The first tab of the Excel workbook are the instructions. Be sure to read these instructions before you fill anything out. If you have completed a budget before, please note that there have been updates to the BudRep workbook. You must use the most current version, which is version 8 or V8. To check if you're using the most current version, look on the Instructions tab of the BudRep. In the top left-hand corner of the worksheet underneath the Instruction heading, you should see the date March 1st, 2013. If the workbook is an older version, you will need to transfer the data. Open a new template and click the button titled Copy Data from a Previous Year's BudRep to this one. You will then locate and open your old BudRep file, and it will transfer the data automatically to the new template. If you do not use the most current version, you may be required to fill out and resubmit a new budget. If your budget begins in a month other than January, there are special instructions in the Instructions tab you will need to read before you fill out a non-standard calendar year budget. Please read the instructions carefully and make the adjustments before you start your budget. If you are using the correct budget template and you're ready to prepare your budget for the next budget year, start by formatting the workbook. Click on the Budget tab and choose Create a BudRep for next year. This will not only change the calendar year on your budget, but it will also populate columns C, D, and E. This will update your actual expenses for your current calendar year and the budgeted remainder of the year revenues and expenses to help you budget for next year. If this is the first time you filled out a budget for a new development, you need to click on the Actual tab. Then you'll need to change the first month of the accounting cycle. Most developments, this will be the number 1 for a January to December fiscal year. Then fill out the year of the first month of the accounting cycle. This will make sure you have the correct year and starting month throughout the BudRep. Next, go to the rent table. There are some important things to keep in mind with this section. The property information section of the rent table is where you enter in the property name, the development ID number located in your regulatory agreement, and the city where the development is located. In yellow, below the city name, you have the option to either use the rent table to calculate gross potential rent or use the manual entry on line 37. If all the rent levels are set as they typically are for developments with rental subsidies, for example, Section 8, then check the first circle, use the rent table to calculate the gross potential rent. For rent levels that can change throughout the budget calendar year, like a tax credit development, then you want to check the second circle, manually enter the gross potential rent. I will show you how to use the rent matrix to manually calculate the gross potential rent on an upcoming slide. The second box that is highlighted is where you enter the most restrictive program. This means all funding sources involved with this property and the rent limit percentage that you are required to comply with for each bedroom type and style at the property. Next to the program type, enter the rent limit that each program mandates and that was agreed on to for financing. Note that funding restrictions can change annually and you must look at the most current rent limit information. The example above is a made-up budget, so don't use the rents as your template. It is the owner's responsibility to be aware of each program funding source and the current rent maximums associated with each program. The number of rooms must be filled in, and the summary box should help you complete this. This is extremely important that we have accurate room count data available. The square foot information must be filled in, which can be referenced in the attached budget workbook of the regulatory agreement for each development. The current rent in column I should be the most recent approved rents by Minnesota Housing, before any rent increase you may be requesting. The utility allowance must be current allowance determined by the payment standard for that city or county. Here's an example of utility allowance payment standard. The payment standard must be submitted as an attachment to all non-Section 8 budgets. You must circle the applicable allowance associated with each unit's dwelling type, the number of bedrooms, utility, and appliance type. Please write the sum of the total allowance below each bedroom type. If the unit size has more than one utility allowance due to various utility or appliance types, you may need to provide more than one payment standard with your budget. Your budget will not be accepted if the funding source requires that the maximum rent must include a utility allowance and you do not include it as an attachment to your budget. Now, going back to the rent table, you will enter the proposed new rents in the column M. This will not include the utility allowances. You will enter the utility allowance in column J. The proposed gross rents will be calculated automatically by adding the new proposed rents to the utility allowance. You can edit the green text columns, but the columns with black text cannot be changed. The percent and dollar increase columns states the change of the current rents to the proposed new rents. We will evaluate and approve all rent increases in properties where we provide first mortgage oversight. We want to be sure that the increase does not displace anyone from their housing. The EFF month column, or the effective month, is the month that the proposed rents will take effect. Typically, this will be used for project-based Section 8 developments where all the rents for the development will increase in the same month. If the rent increase takes into effect at lease renewals or at turnover, leave the column blank. The last column is the rent gap. This takes the difference between the most restrictive rent, column B, and the proposed gross rent, column N, to see if the gap where rents can potentially be increased in the future. If the rent gap is negative, the proposed gross rent is greater than the most restrictive rent for the governing program. This situation would need further review or explanation. The next tab following the rent table is the rent matrix. Just as a reminder, project-based Section 8 developments or any other development where the rents are effective the first of the budget year do not need to fill this out. Instead of using this template, you can submit your own rent matrix that describes the same information. If you decide to use this template, you first need to click Size the Rent Matrix. In the box that pops up, you will enter the total number of units at the property. Note that if you ever need to change the number of units in this table, you must first go to cell A5, then click the Size the Rent Matrix button and enter the correct number of units. Failure to do this would result in you adding or deleting the incorrect number of units. The next two columns, you will add the current rents and the proposed new rents. In the next column, you will add the number of the month the proposed rents will take into effect due to either turnover or lease renewals. For example, if the lease ends in April for a specific unit, you will enter the number 5 since the rent increase will be effective starting in May. Remember that Minnesota Housing will need to approve all rent increases, and tenants must be provided with the required notice period for the rent increase. This will populate the rest of the spreadsheet and will calculate your gross potential rent for each month in the calendar year. You will need to write each month's gross potential rent down on a separate piece of paper to record these numbers on the rent table later on. You would then manually enter those monthly gross potential rents at the bottom of the rent table. This will carry over to the Budget tab of the BudRep workbook. Just as a reminder, the Use Manual GPR entry on line 37 must be selected at the top of the rent table to carry over to the Budget tab. Rent increases are typically requested once a year. You can either choose to request a rent increase when you submit to your budget or when the tax credit limits come out, but not both. You need to request the rent increase in writing and it is not effective until approved by the Minnesota Housing Management Officer. The management officer will see if the marketability, affordability, and tenant population will be affected as a result of your rent increase. We may request additional information from you, such as a list of comparable properties, both market rate and tax credit, that are achieving similar rents. We may also request current tenant information to assist in determining rent levels. There are many factors to be considered in determining rent increases, so if you have questions, contact your housing management officer. The next tab of the workbook is the Capital Expenditure tab. You will enter any capital expenditures that will be completed over the next 12-month budget cycle. Expenses that will be paid through operations should not be included in this list. These items can range from replacing dishwashers to changing windows of the property. You should reference your most recent inspection report for items that were included in your 7-year capital needs projections. The owner's input should also be included. Next, in the Budget tab, the first 3 columns are the current year's actual income and expenses, the estimated income and expenses for the remainder of the year, and the current year's estimated income and expense for year end. The next 3 columns are your next year's proposed budget. You can use your previous year's estimated projections to accurately budget the following year's numbers. The 2 columns under approved budget should not be filled in. These columns are for housing management officers to fill out. Accurate budget notes are critical in evaluating your budget. All line items that state "specify in notes" needs to be clearly described in the notes section. Any assumptions that are made need to be stated in the notes section. If the property brings in multiple revenue sources such as laundry income, vending machine, or cable TV, individually list all projected revenues in the notes and indicate the line item for each of the notes. Also, your property management fee and on-site management annual salary need to be clearly stated in the budget notes. If your management fee is based off dollar per occupied unit or percentage of revenues, even if you're not asking for an increase, this still needs to be stated in your budget notes. Here's a good test to see if something should be included in your budget notes. If you need to describe to someone unfamiliar with the property what is in each line item because there are multiple revenues or expenses on one line item, then it should be added to your budget notes. If you've made an assumption, let us know how you came up with those assumptions. Any significant variance from the current year to the proposed budget year should be included in the budget notes as well. Be sure to reference the Explanations tab for a full description of what to include in the income and expenses lines. You will need to submit the following to Minnesota Housing: your budget or BudRep version 8, the utility allowance payment standard as described in the previous slide, a written rent increase request with supporting documentations if you are asking for one, and the rent matrix if you are not using the rent matrix in the BudRep. The most common error we see is not including detailed budget notes. If you type in a number on a budget line item that says "specify in notes," be sure to write what the number means in your budget notes. Be as detailed as possible to avoid us needing to ask for more information down the road. Do not forget the rent matrix for non-Section 8 developments. Another common error is putting front desk costs and tenant coordinator expenses on the other administration line, line 29. These expenses actually belong on line 35, unique operating expenses. If the units at the property are either Holman units, Marif units, or Section 236 where you receive rental assistance subsidy, those subsidy payments should be listed on line 18. A common error is instead including them on line 1 as a part of apartment rent potential. For Holman units, you should use this line to show the monthly rent being charged for the Holman units. Last, be sure to write in the management fee in the budget notes. The management fee should be $1 per occupied unit or a percentage of collections. Remember that your explanation tabs will provide you with a full description of all income and expense line items. For more information, please contact your assigned housing management officer here at Minnesota Housing. I want to thank you again for listening.